Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Saturday. It's April 28th, 2012. Typically, I do this video on Friday, but as you guys know, yesterday, I gave a special video on the NASDAQ, going a little bit in-depth on the NASDAQ, so I had to break this video into two parts. So if you want to know anything about the NASDAQ, go watch yesterday's video. I highly recommend that. Now let's get on to the rest of the major markets that are out there so that you guys know everything that I know moving into the week ahead. We're going to start off looking at Australia's market, the AORD. In this situation, we showed you a couple weeks back. This is a short-term chart going on the past 3 months. But a couple weeks ago, we showed you the long-term picture of this chart, and it has major resistance at this level here. So we were not going to be a buyer even if she broke out of this situation here, which she was also finding major resistance at for a while. This one has been really choppy, giving lots of good trade opportunities, but we only trade them from the short side when we're looking at major resistance on the long-term chart there. And that's worked very well for us in several different situations we've had here. A couple of things that I'm noticing right off the bat and bring to your attention, I've already shown you in the past. You had a rally up at this point here. Let's go back a little bit further. First, there was this resistance point we kept hitting and selling off of, hitting and selling away from, hitting and pulling back, and again. Another sell signal here, sells off again. Get a hammer formation. She starts to form a breakout potential here, and she does get a breakout. But like we said, there's major resistance here, so we're not going to buy it even if you get a breakout. She breaks out. We get another sell signal here, another one as well here. Those are telling you there's resistance there, there's sell pressure there. So we took that as a short opportunity, made somebody to the downside. Then she starts moving to the upside. We still don't like this area, and we're still going to be looking for short opportunities. But we actually got stopped out on this one. You made a higher high here than you had here, so we were stopped out. But now I'm going to enter it again here. Why? A couple different reasons. Number one, you have made this move to the upside here at the same level, but you're getting the same signal. The chart's telling you that sell pressure is still stronger than buy pressure there. You're starting to roll over, getting confirmation here. You got a lower low this day than you had on this day, lower high as well. And also you got a bearish divergence. What is that? Well, if you don't know what any of this stuff is that I talk about in these videos, you can go to our free website at PerfectStockAlert.com. It's right there, 100% free. We have an entire tutorial library there, all in video format, to explain all this. So I'll go over it briefly, but if you want more in-depth information, please go there and watch those videos. If you're looking at the ultimate oscillator here, you're looking at a measure of the momentum behind the price activity. Typically, if you see higher highs or higher closes, you're looking at a situation where you're more bullish than you used to be. But you want to find confirmation where you have the momentum confirming the price activity. When you don't have that, like over here, you had a high momentum point here above the 70 line, and then you got lower and lower. Here it's telling you that momentum to the upside was decreasing, yet at the same time period, you can see the close of the candlesticks themselves were actually higher. So you were seeing a situation that was unsustainable, and that's what a bearish divergence is warning of. So you look for that setup there, then you start to look for the sell-off, you go in and look for the sell signals, and then a situation where you're getting lower lows and lower highs, then you short it. So what we have now is the exact same thing. We have a situation forming like this, and you get a close here and a higher close here. So this is again setting to be a bearish divergence. You're starting to get sell pressure here. It makes sense to be a shorting here with a stop set off of this high, 1 cent above this candlestick's high. So that's how I would trade that. This is your risk right here, and this is your gain potential right here. So obviously risk-reward ratio is very good there. I'd short that. Quick look here at the Dow Jones Industrial Average. This one has been tricky for me to trade and have not had a good time with it. The past 3 times I've attempted to trade this to the downside, I have been stopped out. So I'm just going to sit back and wait for a perfect scenario to form again before I take another shot at it. I've been right on the actual direction for the overall part, but not on the timing of it. So I'm going to have to sit back on this one and we'll just wait and see. What we are looking at here is go back to this time period here. We had a nice move to the upside, higher high, but there's also a series of lower lows from this low point here and this low point here. When you've got a situation like this where you've got lower lows and higher highs, what's actually telling you is look for the market to go that way, sideways, not in an up direction, not in a down direction, okay? And that's important to know because here you are again. You've got a lower low than you had here, so that you're still trending down. We also don't see a bottom here because there's no hammer formation. And then you've got this high point here, and there's some out there looking for this a test here. You could have traded this alongside. If you did, you're making money, you're happy, you advanced your stop, you're protecting your gains. That makes perfect sense to me. But in this scenario, because you have a lower series of lows, and if you get a higher series of highs, it doesn't confirm a breakout. Or a bullish uptrend or anything like that. What it's going to be telling you is look for the market to do this, move sideways, because you'll have a series of higher highs and lower lows. So you still wouldn't get bullish if you had a breakout. However, there's no guarantee of a breakout, because what I'm actually seeing on this chart right now is a triple top. You have this high point, finds resistance, sells off. Up here again, finds a little bit higher, but again finds resistance, sells off. Now we're moving up here again, the same level. What are we finding? Another shooting star formation. Notice the long wick out of the top there. This one's got a nice sized body here, bullish body formation, so you could still push higher, so keep an eye on it. But all in all, what I see forming right now is just a triple top, and I wouldn't be a buyer of it. Even if you had a breakout above this previous level here, like I said, you're still trending down here, trending up there. It's just telling you look for the market move sideways. The French CAC 40 index, this is basically a chart you want to be watching. If you're looking at Europe, it's one of the charts you need to be watching. And they've already peaked. We've already talked about them several times, and we've traded these successfully, repeatedly. And you've got a very major top formed already on this particular chart. We talked about the head and shoulders formation that you had here. First shoulder, the head formation, and then we had the second shoulder formation closing below the neckline, expecting this right here to be duplicated from the breakout point. You got that. We've advanced our stops, and we got eventually got stopped out, but it was a great trade for us, and we have no problem with this. At this particular point in time, I want to draw your attention to a couple of things. Number one, no hammer candlestick here. It means this is not a true bottom. There's no major support line here. You're now moving higher, but I would be looking for another short opportunity. We can do this different ways, and I'm not going to try to tell you exactly where the high is going to be. I'm going to wait until I see something form that I could then use as a indicator. But right now, I'm just watching it run to the upside. I'm sitting in cash watching it. I want to find something like this, shooting star formation here, something of that nature would be very helpful to me. If I could get a nice move to the upside a little bit more, maybe find resistance at this 50-day moving average here, get a shooting star formation there. If the next day gives me a sell day with a lower series of lows, lower series of highs, I might take that. But for now, I'm just watching it. Okay, there's nothing to be bullish about here. I would steer clear of it. If I was trying to buy something, this would not be something I'd buy. The German DAX composite, another Europe market to be watching with all that's going on over there. She's made 4 consecutive days to the upside, but has not changed the trend at this particular moment in time. You still have an obvious downtrend. High points, low point, high point, lower low, a lower high, a lower low, lower high, lower low. There's nothing about this that you want to be a buyer. At this time, even after 4 consecutive days to the upside, you still haven't even broken out, so there's no reason to be bullish on this particular chart. If you were to get a breakout, you would still have a scenario where you have a higher series of highs and a lower series of lows. Again, no reason to be a buyer on the bull side there. In fact, you'd be looking for a short opportunity. So there's nothing here that I'd like to be a buyer of. I will be looking for a short opportunity if we do get a breakout, inverted hammer, same thing I'd already showed you in the previous chart. I want to look for a situation where I get a nice shooting star formation or an inverted hammer at the top of a pattern. I'd like to see a nice overextension of the price activity before that happens. We're not seeing that just yet. And I'd also like to see the ultimate oscillator up there above the 70 line like we did back here. That makes sense. It's where you find overbought conditions. We are now above the 70 line, but just barely. So again, I'd like to see a little bit more develop before I start shorting, but I would expect we're going to find the same resistance that we've seen before. Here's the resistance line we had before we broke out. We finally broke out. We were unable to maintain that support. We did for a few days, but then we broke through it. Attempted again, broke down again. So this is still major support right here. So be looking for that support there. Or I misspoke. I should say resistance. A quick look here at the gold chart. This one, again, I haven't messed with in quite a while. I don't see a really obvious trade opportunity here. Right now we're looking at, you have this low point here, higher high point here, actually we just bounce around right here, make a series of lower highs. Made a lower low, just nothing you can really trade. Real tight trading pattern here, kind of moving sideways. We did have a series of consecutive days to the downside. 1, 2, 3, 4, 5, 6, 7. That's above average, obviously. Look anywhere on this chart, you won't find 7 consecutive days into the downside in a row. Eventually, you're going to get an update. So you started to see that, and that's why I'm not really bullish on this, because this right here was already calling for an update. So to start seeing a few updates is not all that impressive, especially being that you still haven't broken out to new highs. We're still getting a lower high, lower high, a lower high. And if we broke out now, okay, maybe if you get a higher high, then you've got this low point here, a higher low. Maybe you're starting to turn this guy around, but at that time we'll have to analyze it and then look for a pullback to give us a buying opportunity. So right now we're just watching it develop, see if it does change direction. It's possible to do trade gold, and the fact that you're going to have a lot of austerity, you're going to have a lot of trying to bail out, Spain, so forth and so on. That's coming. So eventually, people will be devaluing currency, which of course drives gold higher. The Hong Kong Hang Seng Index, this one is obviously in a very strong downtrend. We did take this buy opportunity here. Typically I don't do that, but because of the major drop and we hadn't tested the previous high and so forth and so on, took that as an opportunity. But I didn't trade this to the downside here, even though I wasn't bullish on it at that point. We got stopped out. I just didn't take an opportunity. Now I want to do that. We had this oversell here, way closing the entire candlestick closed below the Bollinger Band. Typically, when you see that, you're going to get a knee-jerk reaction in the opposite direction because you're going to have a point where people say, "Oh, it's way oversold. Short term, it's going to bounce, and you can make money that way." So people did. She makes a move up here, and she does a couple of different things. You come up here to 21.1 thousand level here, slightly higher or about equal to 21,000 here that you had at the same point. So you don't really get a breakout. You do get a breakout higher than this point, so maybe you've got something developing here. But the main thing I've been noticing with this scenario is that you've got this uptrend, or this 50-day moving average right here, this red line. You got a break of that. Then you jump up here above it, sell down below it again. This time you come up to it and you find resistance there. You sell off. You come up to it again, lower series of highs, and you roll over again. You're finding resistance at the 50 because you've gone from a bull market to a bear market, and that's typical with those scenarios. So right now I'd be actually looking for a short opportunity here. Anything, let me clean that up so you can see it a little better. On the Hang Seng, if you're going to be trading this with an ETF or something like that, anything at this point or higher within this range right here where the stop loss is at, that's where I'll be looking to do my shorting activity, looking for a test of this low again on the sell side. So you've got this risk and this reward. The India Bombay Stock Exchange, or the BSE, this one's not really giving me anything to trade right now. She's kind of moving sideways. We've been seeing this opportunity. Attempted to trade it a couple times back here. Made money on this one, got stopped out on this one. On this situation here, we just recognized that we were moving sideways, so we shorted, and that's what we did here. Looking for a breakdown, didn't happen. We got stopped out again. She's just going to be bouncing around on this range here. I'm just not going to trade this. There's not enough activity. I like to see situations where we've got a lot of volatility, and then I can make those trades and feel much more confident about them. When you're in a situation like this, a little tight trading range, eventually this little range here is going to break. I personally think it'll break to the downside, but that's just my opinion. Until it actually happens, it could do this for a long time, moving sideways, and I don't really like to trade those. The EWJ, or Japan iShares, this one, obvious, same chart pattern. Here you are, moving sideways. We talked about this before. You did have a break of this at this point here, but the candlestick formation didn't suggest a continuation of the sell-off. In fact, it's like you have back here, where you're looking at a major drop here that met buy pressure, and then they drove it higher. Here we had the same thing, so I just didn't trade it. I just advanced my stop, got stopped out. I'm just sitting here watching it move sideways, but there's not enough actual movement in here for me to feel confident on a trade, so I'm just going to stay out of it for now. One more item I would note about this, I talked about this a couple weeks ago. You've got a major gap here and here. Typically, when you're talking about ETFs and things of that nature, gaps you don't pay that much attention to, but when they're really large, I do. So in this particular case, you could see a breakout here to fill this gap. It's just something that could happen. I wouldn't try to bet on it, but if I start to see a breakout here and starts to fill this gap, I would just let it slide past me. I wouldn't concern myself with trying to buy it, because you still got this major resistance point here, here, here. All of that is major resistance, so filling this gap doesn't actually give me a breakout. It just gives me a breakout of this little base formation here up to resistance, and then what? We'll have to look and find out at that time what happens if it breaks out. The FTSE, or the London Financial Times Index, and this one's pretty obvious the direction. It's a down. Even though we've had 4 consecutive days to the upside right now, right here, this doesn't change anything. You've still got a series of lower highs, lower lows. There's nothing about this that I actually like, on the bull side at least. I want to see what happens. I'm not going to jump back in on the short side just yet. We actually may get stopped out right here, or have already, not actually, but whenever we get stopped out, if we get stopped out, I would just continue to watch it and look for another one of these. Shooting star, shooting star, shooting star, shooting star. There's a major level of resistance right there, so when we get up to that level again, if I get the same signal in the same scenario, I'm going to do the exact same thing I did over here. I'm going to take a short position and trail my stop down to them eventually stopped out and make some good money on that. The NASDAQ chart, I'm not going to go into it. I did an entire video covering the NASDAQ short term and longer term on Friday yesterday, so watch that video if you want to know more about that. Looking at the XOI, getting a quick little look here at oil, we don't see anything that we like on the long side. This is basically an overall downtrend, no question about that. It's obvious to everybody who would possibly be able to draw a straight line, even if you're using crayons. So there's nothing here that I want to be a buyer of in any way, shape, or form. And what I would point out is even if you get a breakout above my stop line right here, you would still have a scenario where you have lower lows and higher highs in that case, and so it would still not be a buy this chart. It would be a moving sideways scenario, so I wouldn't trade it. Looking at the UUP, or the US Dollar Bullish Index Fund, the main thing I have about this particular chart is I do see an inverse head and shoulder, possible inverse head and shoulders forming here. I want to keep an eye on it. Right now we've pulled back down to a major support we found right here. I want to see if that holds, and right now with this black arrow, it's indicating that I could see a trade here if the following day confirms this hammer candlestick. So what we've done is we've sold off pretty good, and we've got a nice little hammer candlestick formation right here. If the following day gives you a higher high and a higher low compared to the candlesticks themselves, then I would consider taking a buy opportunity with a stop right here. And when you're looking at the dollar, you got to think about it in terms of the market. What's it mean? When people sell stock, they in effect buy dollars. That puts a floor in the price of the dollar and drives it higher. So when you're looking at the overall markets and you're saying, hey, I'm looking at a potential triple top, I'm looking at all these different sell signals and so forth and so on, you should be seeing buy pressure then on the dollar. That would make sense. Those two things should be confirming one another. It doesn't mean that this is exactly how it's going to work out. You may actually break through that resistance and then go lower in the dollar and go higher in the markets. We'll have to wait and see. But the main thing is that you should be able to compare them and say, yes, they're agreeing with one another. The Russell 2000 Small Cap Index, this one's going to be really important to me next week. I want to get short again on this one. We've made good money on this one on the downside, and there's a really good reason here. There's a ton of sell pressure right here. Back to the time period a couple weeks ago when we were talking about the AORD having longer-term sell pressures and resistance lines that they were struggling with, we talked about the same thing with the Russell, and that's what you're seeing here. So this was the resistance line that you had. We come up here, we hit it, we sell off, we hit it, we sell off, we hit it, we're tested, we sell off again. This was a huge move to the downside, so we took it as a buy opportunity as well. She comes up here, we look for a test of this high because we don't expect a breakout, and even if we got one, longer term chart says it's not going anywhere. So she comes up here, we advance the stop, we eventually get stopped out, and she's now we tries this little breakout thing. We told you could trade it, but we didn't expect it to go very far, and then down she goes here, up again, false breakout, again, pulls back, false breakout again, pulls back. She's just been unable to get through this major level of resistance. Then she dives lower. Now she comes up here again, we sell off, and we make a nice big move to the upside. Note the huge gap. We talked about that on Friday's video. I like this. This is a great opportunity if I can get a good signal to get in. I want to wait till I get a little bit higher, but we're not that far away from that. This is the major resistance I want to look at, also up here. So any kind of a move up in this range that gives me another one of these inverted hammer kind of situations like that, I'm going to be looking for that and say that's my entry opportunity. I'm going to be wanting to trade it big time simply because there's so much volatility in the chart. Like I talked about before, when there's no volatility, I don't like to trade them. The gains are too small. The risk is almost equal to the gain in those scenarios. So I don't like that. But in this scenario here, we got a nice move to the upside. If I get a little reversal signal, something that I can really use, and I can set a tight stop and be entering at this range, and I've got this kind of gain potential, I'm going to definitely trade that, especially with this major gap below here. The SPX, or the S&P 500, this one, there's not much I can do with at this moment in time, and not a lot I can tell you about it either, other than the fact that you had a major move going on to the upside. You found support at the lower Bollinger Band line above the 50-day moving average, and then you started to close below it here, 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 here. That's a warning sign that you got a problem. So what I would expect to do is see a move to the upside. It could even break out, but at this particular point in time, yeah, I think you're topping, which means that you're just going to be topping doesn't necessarily mean that you peak tomorrow. It can take time to develop. That's why you can get triple tops and head and shoulders patterns. They take time to develop, but the main thing you should draw out here, even if you get a breakout, you're going to end up with a series of higher highs, lower lows. All of this is telling you the same thing. Chart's moving sideways. Why is she moving sideways? Is this the bottom and she's forming a base? No, we've been rallying for a good while. She's topping. That's what that means. Silver chart is another reason why I haven't been trading gold. I'd like to see silver and gold confirming one another in order for me to get in. And when that's not the case, I'd have to be skeptical and ask, why aren't they confirming one another? So what in this scenario I have right now is a lower series of highs, a lower series of lows. Look at your high point going down. Look at your low points going down. I have no reason to buy this because it's in a downtrend. I want to work with the trend, not against it. In this scenario here, even if I were going to try to work with this trend and short it, the actual volatility has been nil, so I don't see a lot of opportunity here. I like more volatility if I'm going to start shorting, and I'm just not going to mess with this one. Looking now at TSX Canada's markets, the Toronto Stock Exchange. This one has had a nice move to the upside for a few days. This one actually does really well with metals. So when you're seeing gold and silver start to climb, you'll typically see this one as well do the same. The main thing here, I want to see some confirmation. Show me some breakouts. You got a series of higher lows between here and here. You got a hammer candlestick formation. All that looks fine to me, but you also had this major gap, which again, major gaps just call for being filled. So you get this fill here. You had this one over here that was filled. Right now, I don't see anything that's like, oh, I have to be a buyer of this. Even if we get a move to the upside here to fill this gap that you had here, I still would not be all that enthralled to be a buyer, because this point here, here, and here was at one time, and here was at one time actually a support line. Well, it broke down, obviously, so when support breaks down, it then becomes resistance. So another day to the upside here and finding resistance at the same level you're going to be finding the 50-day moving average just tells me we're still in a bear market. I'll be looking for a short opportunity, not a buy. The VIX is another chart we talked about last week. I'll go over it again just for a moment with you. Right now, I'm looking at the VIX and looking for a particular signal. I want a hammer candlestick on the VIX because the VIX runs the inverse of the S&P 500. So if I'm finding buy signals on the VIX, then I would be expecting to find sell signals on the S&P and so forth and so on. So I would be looking for a buy signal to tell me where exactly the top is in the S&P. So get some confirmation between those two. Right now we are seeing a little bit of buy pressure here. You can see this wick out of the bottom here. You see the following day was a little bit more, but it's still not a hammer candlestick formation, so I don't want to trust that as being the bottom. I want to wait, see if I can't get a hammer. This is a hammer candlestick telling you you've got some support there. But I do expect we'll find it at this range, even in this range, because this is where you found it before. That's where you found some good quality support here. So pulling back to this range here and finding it again would make sense to me. Also, the ultimate oscillator, when she falls below the 30 line, at or below, that's where you start getting oversold conditions. So we're down there now, so to find that develop would make sense to me, but it also coincides with the peaking of the overall markets that I've been seeing. So overall, just my analysis, looking at all the charts, I see no reason to be bullish in these markets. I see we are moving to the upside, which I have no problem with, but I'm looking for a short opportunity. But I'm going to be patient with it. I'm not short this time. I'm just watching, but I'm definitely cautious. If you're long, I wouldn't be. If you've not been to our free website at perfectstockalert.com, it is right there. It's 100% free. All we ask in return, please refer a friend, aka share our videos online. I would love to take a moment, but I don't have enough time on this video to show you guys what you guys have done for our website, just referring your friends and sharing our videos online. I'm going to do that later. I just want to say thank you guys very much. It means a lot to us. We work very hard at what we do here every single day for you guys, and the fact that you guys are sharing our videos online, it means a lot to us, so thank you. God bless, take care, enjoy your weekend, and be safe. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.